What's up, everybody? As we get ready for the fall housing market, the big question is, will home prices go up or will they start to correct again? Will interest rates go down or will they continue to rise? Will anyone be able to afford to buy a house this year? For the week ending August 3rd, the average 30-year fixed mortgage rate jumped to 6.91%, up from the previous 6.81% according to Freddie Mac. Just to give it context, last year at this time, rates were around 4.99%. And according to Redfin's latest housing market update, the median U.S. home price is up 3.2% year over year, the biggest increase since November. So today, we're going to take a look at some of the industry insiders' most recent housing market forecasts to see what they're saying. We'll look at Zillow, Corelogic, Freddie Mac, Morgan Stanley, and AEI, the American Enterprise Institute Housing Center, a Washington, D.C. based think tank. They don't all agree, so let's take a look. Let's dive right in. Let's start with AEI. According to their latest housing market indicator report, they believe that home prices are likely to heat up even more, estimating that home prices will rise 4% in July from a year ago. Home prices will surge 6% overall for 2023 and 7% overall in 2024, according to AEI's base case scenario. This is largely due to historically low supply, cooling yet still strong job numbers, low levels of foreclosures in most areas of the country, work from home, and continuing home price arbitrage opportunities, AEI added in its report on Tuesday. We've spoken about the golden handcuff effect in recent videos, where sellers who would normally want to sell their homes right now to either downsize or upsize are staying put because they don't want to give up their super low interest rate, sometimes even below 3%, then go buy something with a 6 or 7% interest rate. So inventory is way down, causing buyers who still want to buy, even with these high interest rates, having to compete for good houses. And by good houses, I mean those houses that show well and are priced right, therefore escalating the prices way above the asking price. According to Redfin, the total number of homes for sale is down 19%, the biggest drop in a year and a half, and new listings are down 21%. Add that to the fact that home prices have jumped over 40% since pre-pandemic levels, and buying a home right now seems more unaffordable than ever. Moving on to Corelogic. According to Corelogic's latest U.S. home price insights, for August of 2023, home prices nationwide, including distressed sales, increased year over year by 1.6% in June of 2023 compared with June of 2022. On a month-over-month basis, home prices increased by 0.5% in June of 2023 compared to May of 2023. These are the latest numbers because we're still in the beginning of August. As for the future, the Corelogic HPI forecast indicates that home prices will increase on a month-over-month basis 0.6% from June 2023 to July 2023, and increase on a year-over-year basis by 4.3% from June 2023 to June 2024. Corelogic expects year-over-year U.S. home price appreciation to pick up for the rest of 2023 and reach about 7% by early 2024. While the continued imbalance between buyers and sellers continues to pressure home prices, June's annual bump in price growth echoes economic resiliency, a thriving U.S. job market, and strong consumer spending. And while higher mortgage rates are impacting affordability for buyers with loans, almost 4 in 10 sales are all cash transactions. Also, most baby boomer homeowners have substantial equity, which could be putting pressure on prices in markets where that generation is currently migrating. Selma Hepp, chief economist for Corelogic. Remember, these are national numbers. Real estate is very localized, so what's happening where you live may be very different than what they're projecting. Continuing on to Zillow's forecast. Zillow economists expect U.S. national home prices to rise 6.3% over the next 12 months. Their forecast model predicts that 48 of the nation's 200 largest housing housing markets. We'll see increases of 7% or greater over the next 12 months. I'm not going to name all 48, don't worry. You can look later. I'll put a link below in the description. But let's at least take a look at the top 5 because they are literally all over the country. Zillow expects Baton Rouge, Louisiana to have a price gain of 9.8% from June 2023 to June 2024. Tyler, Texas, 9.3%. Macon-Bibb County, Georgia, 8.9%. Fayetteville, North Carolina, 8.7%. And Anchorage, Alaska, 8.6%. The one thing that all these places do have in common is really tight inventory levels and less deteriorated affordability. And when they say less deteriorated affordability, they're comparing these places to the Zoom towns like Boise and Austin. Zillow always seems to be on the bullish side when it comes to their forecasts, and they're actually very rarely correct. So let's just keep that in mind. But not everyone is as bullish as Zillow, Corelogic, and AEI. The housing market is far from fully healed, says Danielle Hale, chief economist for Realtor.com, in her analysis of the latest housing data. Home sales are still on target for their lowest annual tally in more than a decade in 2023, and the market has no slack, with homeowner vacancy hitting a new record low. Hale predicts that we will not see a new home price peak in 2023 compared to the June 2022 peak. In terms of inventory levels, she said, "We expect a dip of 5% for 2023 overall compared to 2022. And according to Freddie Mac, they expect U.S. home prices to fall 2.9% between Q1 of 2023 and Q1 of 2024, and then another 1.3% between Q1 of 2024 and Q1 of 2025. Our official corporate forecast for the next 12 months has house prices falling by 2.9% and an additional 1.3% over the subsequent 12 months. However, given the current housing market conditions with historic low inventory and an early read on our data, we will likely revise our home price forecast in the next iteration of the economic, housing, and mortgage market outlook. We expect tight inventory will push sales volume down, and we expect it to keep home prices up. Finally, Morgan Stanley Housing Analysis expect U.S. home prices to hold steady year over year for the rest of 2023 before edging lower next year. We forecast house prices in 2023 to finish the year flat versus 2022 before falling 2% in 2024 as affordability continues to adjust slowly back to long-run averages and inventories begin a slow climb off multi-decade lows, wrote the firm's housing research team. They do know that they feel the worst parts of the decline are behind us. Once again, challenged affordability and a difficult lending landscape prevent substantial increases in the near term, the firm's housing research team wrote about housing activity. But we do think that the steepest parts of the decline are behind us and envision more of an L-shaped recovery from here. So once again, the industry insiders do not all agree on their forecasts, and quite honestly, they could all be right depending on where you live. We're in such a mixed market that one place could be seeing price declines while another place is seeing multiple offers with prices going way above asking. In Redfin's latest housing market update for the 4-week period ending July 30th, sales prices increased the most in Miami, up 12.7% year over year, Cincinnati up 9%, Milwaukee up 8.6%, Anaheim, California up 8.5%, and West Palm Beach, Florida up 8.4%. Home sale prices declined in 19 metros, with the biggest drops in Austin, Texas, down 9.9% year over year, Phoenix down 4.2%, Detroit down 3.9%, Las Vegas down 3.5%, and Fort Worth, Texas down 3.2%. 35 45.9% of homes for sale sold above their final list price, down from 43% a year earlier. And on average, 5.8% of the homes for sale each week had a price drop, down from 6.3% a year earlier. But what's going on where you live? Where I am in the DC area, it's literally house by house. One house will be selling at multiple offers and go way over asking, while another house sits week after week with price reductions. I do think we'll know more in the next couple weeks when we see what happens with interest rates. But the bottom line is that housing has become completely unaffordable. If you missed the last video on Goldman Sachs housing price predictions, definitely check that out next. Thanks for watching. I do appreciate it. Bye!